so let's see what do I have today. So this is from my Twitter. So okay, this is the number what I'm looking at. Okay, so I also mentioned fair value gap (FVG). So I'm on hourly chart. You could go on a daily too and see if there is any fair value gap mentioned here. These black lines are my levels. If you know how these levels came, perfect. If you don't know, I think the easiest way where you don't have to do anything will be to follow a few traders who I'm following. AlgoFlow is definitely one of those guys. I do follow these as a bigger time frame levels, but you would also have some micro levels as well, and they would be on my usual charts too. So I'm on a hourly chart. That's where I like to see the action. I am not having, let's see, do I have a fair view? Okay, nope, I don't. Let's see. I'm gonna go to my indicator area. And I'm gonna type fair value gap. It's the first one what you see by space, whatever. So now I have a fair value gap on my screen. These yellow and these purple things what you see on top, these are the fair value gaps. So if you have the gaps, then price is facing those, they're going to act as a resistance. And if the gaps are already been created because prices have zipped through and there has not been an auction in that area, that would be acting as your support, as a support. So as you can see, these yellow or beige, whatever color you want to call this, so market gave you an indication that on hourly chart you have a 4054. Now I don't see my level around 4054. My level is at 4060. So what I could do is I'm going to wait for a bounce, and you want to make sure that same 4054 is on a multiple time frame. So you can see on a 10-minute, you can see on a 5-minute chart, you will see this 4054. This is a level. Now, when this happens, I'm a bit aggressive when it comes to my entries because for me, the stop loss will be right below that. So I usually, as I have mentioned a few times, my first few trades, first trade of the day, I will have usually 4-point stop loss. But for all other ones, I'm going to keep only as a 2-point. And I do keep taking multiple trades unless, you're encountering a trend day, which frankly, at that point, you don't know. So I took an entry. I would say, about 5 contracts here, so 5 lots. And as the price did go up and it did bounce, this is where I added another five, I think 5 or 6 more. So yeah, it was a bit aggressive sizing, no doubt about it. But I was counting on that, yes, multiple time frame, I have encountered a fair value gap. Now, if you compare it with, let's go on an hourly chart, you don't see any immediate support. Like if we go with the support and resistance theory, 4049 should have been the bounce area, or something around 4044, but you didn't see that. Now let's say that prices continues to go down, then I will be looking at the entry at that spot, no doubt about it, because then I'm going on the support and resistance part of it. But the fair value gap can give you some of these entry, and sometimes you realize, like, prices are returning from a no man's land, and what is the drive behind it? It's a fair value gap. So fair value gap essentially is created by the, let's see, so you have a multiple fair value gap. So once this was created, all it means is this is a candle and this is a candle. So the top of this candle and the top of the previous candle. The candle in the middle is actually zipping through, and as it zips through, the third candle is not able to come down all the way. It is actually retracing from, way earlier. So that creates a gap, and this is what we call a fair value gap. So this was my entry, and as you can see, did I hold all the way? Nope, that's not the case. I actually go for this POC. POC is my exit. So I think I ended up selling some here. So that was a pretty decent trade. So once I have offloaded some of the contract, you have some profit. You are able to bring your stop loss, from this area to here. Okay, looks like market is closed now. And I think on this candle or this candle, somewhere around here, I ended up selling it all. Normally, that is not my strategy. I will definitely take entries on a fair value gap, but normally I don't like to hold it so long. But the reason I did it is I would go on my usual 9 EMA, and I don't see it here. Okay, let me make this as a 9 EMA. Okay, this is a 9 EMA. So let's make this as 9. You get the idea. So as you can see, so yep, so 9 EMA, and I think the prices started to retrace. Um, and there was a VWAP also. So you have a VPOC, you have a VWAP, and your 9 EMA. And I think there was some rejection issue or so. I had something, and I was a bit biased too, so I sold it early. But yeah, I mean, certainly if you have a 5-figure trade or a day, why not? So that is on the fair value. Now this is applicable on pretty much any ticker, and I use the very same thing on Tesla. So Tesla was, and I apologize. I know I mentioned I will be sharing it, but I did not. So Tesla had a fair value, which was, so this is a day I didn't really trade much, but I want to say I have a feeling it was a rejection, which was my short, and it ended up closing that fair value, and then it fell down afterwards. I think this was my trading, if I remember that correctly. This is where I was short, and market kept going up, so I was stopped out. I think I mentioned that in as a screenshot. So use these fair value gaps. As you can see, this was a fair value gaps on top. It was actually created by the price action way earlier, somewhere around here. So this is it is being honored by Tesla. The what you see now is, so the indicator is as such that as the gap is closing, you would lose that part. So that means that gap will be that value gap will be closed. So you would not see any color in that. But as the prices are going backwards, it will be creating another fair value gap. So now this is a fair value gap, would act as a magnet, either as a rejection, or at least the prices will be going and trying to um, touch that at least. So I just wanted to share that. Yeah, let me know in the comments